Hey guys, so welcome to my new YouTube trading channel. So the purpose of this channel is basically to give back everything that I've learned over the years of trading, and I'm going to be running through live trades that I take, breaking them down, giving you my thought process on why I entered these trades, where I went wrong, how I manage my risk, where I place my stop loss. There's no hype, there's no signals, and there's no selling a dream. So I'm going to be breaking down real trades that I take. I'm going to be talking through the thought process that is required behind it, why I entered the trade, where I went wrong, where I placed my stop loss. The goal here is to help you understand how to think when it comes to trading, not only just to click the buy and sell buttons. So the purpose of this video is that I'm going to be breaking down a Bitcoin trade that I took last week and running through the thought process behind entering this trade. All right, guys, so if we now jump onto the charts, we're trading Bitcoin here. Obviously, that's the trade that I took last week. The current conditions of the crypto market is not the best, right? We've definitely had better conditions these last 2 months. The conditions aren't the best. Yes, we are still having volatile moves, but there is no narrative behind it. Right. And there's only certain times where, yes, you can pick up a nice trade. For example, the one that I took the other week, which I will be breaking down why I entered this trade. So when it comes to trading, what I always do is I always start on the high time frame. And the reason why I like to start on these high time frames is because they give me the high time frame bias, where there are key important major structure levels that I need to look out for. So if we have a look at this chart, I can straight away tell that we are sitting in a current demand zone. And now this is very important to look at. Now, the fact that we are sitting in a demand zone signals that we should be looking for potential longs here. And the reason why we're looking at potential longs here is because if you have a look here, we've had a nice reaction of this demand zone. Price has pushed deep into this demand zone and has come back up and is creating a bit of structure of price. However, we're not looking too much off the structure of price right now. We're just looking for some key major levels where price currently is, and that being is in this current demand zone. Right? There's no point of me wanting to go and mark up these supply zones up here. Why? Because it's too far away from price, and we're on the weekly time frame. This could take weeks for price to come into these areas. And likewise down here, there's no point in looking at these current demand zones. Potentially later on in the future, if price decides that it wants to take out this low, then that is a good area to be looking at. But right now, we just want to look where price is, the closest key levels to price that we need to be looking. So now that we've identified that we are in a demand zone, we can move on to a middle time frame, which is roughly the 4 hour to 8 hour. Right, so now jumping onto these timeframes, they give us more data of price. They show more structure and formation for where we can make more better buys of wanting to go long and look for a potential entry later on the lower timeframes. So yes, we've marked out the weekly demand zone. So now if we also come onto the 8 hour, we can see a bit of formation of price. It's not the best structure, but it does give us something to work with. We can see a little bit of a bullish structure forming, but at the same time, it is mainly ranging structure, right? Let me put this back into replay mode so it gives a better understanding of where we were before and the trade that I took. So now this is how the charts looked exactly when I hopped on. We were sitting in that weekly demand zone like that I marked out. So I'm going to be looking for potential longs, and I want to build a confluence as well on the middle and lower time frames to look for these potential longs, because when they all align together, that makes it even more sweeter to take the trade. All right, so seeing this 8 hour, there are a few things that we can definitely mark out here. Number one, this 8 hour demand zone. This is very, very key because we're sitting in that weekly demand zone and we are on an 8 hour demand zone. Put these together, and that's both wanting to look for potential longs. Okay, there's not much as well to look for other than this demand zone, as price is very choppy. On the lower time frames, when we drop down, that's where we will look for liquidity to be taken and liquidity to target. Right now, I'm just looking at the overall structure. I'm looking for also as well key levels where price is on these lower time frames compared to the weekly. So now that we can jump on down to the 1 hour time frame, this just gives us more data to look at. All right. So now on these 1 hour time frames, what I'm looking for is liquidity to be taken and liquidity to target. And I'm going to also run you through potential trades that individuals would take where they would get stopped out. And that's where they go wrong. And they think their strategy is wrong, but their bias is correct, but their execution is just poor and they're rushing in too early. So if we have a look here, we're in this 8-hour demand zone. We do have a lot of structure forming and it looks to be bullish from this leg onwards, right? We've had structure come up, high, low, and then it's broken again, pushed up, right? If we jump onto the 15-minute, it will give us more data to have a look at this where it's built more structure, okay? Another thing to look at as well is all of these lows that has been respected. There is going to be a lot of sell-side liquidity sitting here. The reason why this is because people are going to be stacking up their buy orders in this demand zone. And there are also going to be sell orders here, which I will explain in a minute. Now, there's also sell-side liquidity here for traders who are trading on the high time frame. They'll be putting their stop loss here and there'll also be sell orders, right? With these sell orders, the reason why I'm saying there's sell orders is because there's going to be traders as well looking to be going short from this position, right? They're going to see this as a break of structure, continuing on to the downside. They're going to look for entries here and potential places to put their stop loss. All right. So at this current stage, I'm not looking to get in the trade. Why? Yes, we're in the demand zone, but the reason why is because we've had no liquidity to be taken yet. All right. So I've marked out the liquidity to be taken level. Let's have a look at some liquidity to target. Now, there is a major one up here that we can mark out all of this liquidity. There's some here sitting. All right, so that is a major level to be looking at. So what I'm doing is now I'm going to be letting price play out to give me a better entry. We did have a nice push up, but it wasn't strong enough and something that I was looking for. And now, as you can see, we've had price break this low. All right, on the 15-minute, it does look like a break of structure. All right, and that's where people are stacking their sell orders, and individuals who also went long, they're getting stopped out of their trade. Now, this is very, very important that we pay attention here to this trap and reclaim, right? As you can see, if we play it out a bit more, price has reclaimed this level. It's come and closed above the liquidity level that it took, right? If we move on to the 1 hour, we get a better depth of understanding of how it looks. Right, we've seen price break it and it's also reclaimed and closed above. Now, this is a very nice trap and reclaim. Why? Because it's trapping all these sell orders, people going short, right? So at this stage, I'm still not getting in. I'm looking for a bit more confirmation for my entry. So we'll let it play out. And then this is another sweet spot to look out for. As you can see, we have had price reject and bounce off this level and respected it many times. Now, this is a really good signal for me to look to enter. So if we go back and look at all of the confluences that we've gone through. So on the weekly, we've marked out a nice demand zone. On the 8 hour, we've marked out a demand zone. On the 1 hour, we've marked out liquidity to be taken, right? And we've also marked out liquidity to be targeted. And there is also more liquidity to be targeted after the move of structure and formation of price. We've got liquidity to target here. We've got liquidity to target here as well. So now, having marked out those internal legs that have a liquidity to be marked, what I'm going to do now is I'm going to show you where I entered my trade. So I went long roughly around when we had this little pullback here, and I entered and I've placed my stop loss right under this low. And now I'm going to explain to you why I've placed it under this low and not this major low here. There's two reasons. Number one, for this trader, personally, I think that if price came to this level, I'm invalidated on this trade, right? And the reason why I'm invalidated on this trade is because if price is coming to this level to take it out, there is a really good chance price would come to this level, this major low, and take it and do a liquidity sweep there as well. So then you could ask me, why don't I put my stop loss here, right? It's still going to take me out. It's still going to do that sweep, right? And I'm still not going to get a good risk to reward ratio. As you can see, my risk to reward ratio is only 2. Whereas if I place my stop loss here, I could get a nice 3 risk to reward ratio. Now, let's say I've lost this trace and price comes down further, right? We see a bit of action, takes a sweep and comes back and starts moving up. So at this stage where it's done this sweep and it's giving me more structure and confirmation to go long, I could enter roughly around here, place my stop loss under the swing low that it created and target these highs. And as you can see, I'm getting a better risk to reward ratio. I'm making back the potential loss and also extra. So there's no harm in me getting the trade wrong. I can always enter lower at a discounted price and get a better risk to reward ratio. So now, yes, we're in the trade. There are some also key components to look out for, right? So we do have this imbalance zone sitting right above the liquidity to take. That price could potentially react off. Right, I'm just going to name it imbalance. All right, so if we let price play out, and we did have a nice strong push to the upside, but as you can see, we did have a little bit of a reaction here. Now, most traders, what they'll do, they would get a bit worried here. And I'm just going to run you through why they would. Price has targeted this liquidity level, right? We've come into the imbalance and we've had a bit of a rejection at this level, right? And it's a 15-minute imbalance. And traders would most likely get scared thinking price is going to reverse here and they're going to exit the trade instead of letting price play out. And the reason why I didn't at this level is, number one, we are comparing a 15-minute imbalance zone to a 8-hour demand zone that we're currently in, which price has strongly pushed off at, right? So there is more bias of price continuing up. Price could definitely come back down, but I'm weighing the odds of which has more strength, the 8-hour demand zone or the 15-minute imbalance. And if anything, I can always move my stop loss to reduce the risk of the trade. We've already pushed up so high. Moving my stop loss to a half or 1/4, reducing the risk, I'm still allowing price to play out because at the end of the day, price is not always going to move straight to your take profit. You need to understand that. Price is random. You're going to have pullbacks. You're going to have a bit of choppiness. You're going to have to allow these out to play and let price come to your take profit. Yes, you can secure profits as well along the way. Take partials, right? Take half your position, secure the profit, move your stop loss, anything to secure the profits, right? Because at the end of the day, if we're so far into profit, you realistically do not want to be taking a loss. So here I would let price play out and a bit of choppiness, and then nicely we've pushed to take profit. So this was the Bitcoin trade that I took last week and a quick rundown of the thought process behind it. It was a very nice, clean trade. The fact that it didn't pull too deep into our stop loss and it moved straight off the entry. But if you guys found this very helpful, make sure you do subscribe and leave a like because there'll be plenty more videos like this coming along. I'll be running through post breakdowns. I'll be doing live breakdowns during the process of me actually trading. I'll also be doing a lot of technical analysis study on the charts and as well a lot of psychological training mindset. Make sure you stay tuned for those because I do break down real trades that I take so I can show you how to think, not only what to trade. Peace out, guys.